Let's move on now with our discussion about chart construction. This slide is about line charts. So what we're going to do is look at the different types of charts, and the most simple and basic type of chart is a line chart, and we'll contrast this to a candlestick chart later on. Now, a line chart is a very simple chart. Essentially what we do is take the closing price for each day, or whatever our time frame is. So if it's a minute chart, we'll take the closing price at each minute. If it is a weekly chart, we'll take the closing price at each week. In the case of a daily chart, we take the closing price for each day. Then what we do is draw a line to connect the closing prices for each day and create a chart. Now this is fairly simple, fairly easy to interpret. It is the most commonly used chart. So all the charts we've been looking at so far in this lecture are line charts. They're essentially connecting dots together with the line. And we'll quickly go into Yahoo Finance to just look at this and make sure we understand it. Here we are back to our chart on Yahoo Finance. Now I just want to briefly show you that this is a line chart. Essentially we have, in this case it's a weekly chart because we're looking at the price over 5 years time, and we have point over each week. So we have a week of December 24th, week of January 7th, and we're connecting all these points to create the line. Now we can change the chart type in this chart settings. If we go to line type, we'll have OHLC, which is open, high, low, and close, which we'll come to in a couple of slides. Candlestick will come to in a couple of slides. Now line and mountain are essentially the same thing. The only difference is that the mountain chart has this blue color underneath the line, so it looks more like a mountain. If I click on line, then we can see that there is no color underneath the line. If I click on mountain, then we have color underneath the line. Again, this is just for visual purposes. I like this mountain chart because it makes it easier to see the line, but you can obviously use whichever one you want. And now let's go on to discuss the other type of chart, and we'll come back to Yahoo Finance and show you the open, high, low, close, as well as the candlestick chart. Candlestick and bar charts. Now we've looked at what is a line chart. Let's now go on to the other type of very popular chart, and this is called either the candlestick chart or the bar chart. Now there is no real difference between the two. They look a little different, but they provide us with the same information. So what do we have of this type of chart? What does it mean? With the line chart, what we used to create the chart was one piece of information for each day. So we took each day's closing price and made a chart of that. With the candlestick chart, what we are going to do is use 4 pieces of information instead of just one. So we will use the opening price, the high price, that is the highest price in the day, the low price, and the closing price. So instead of having just one data point for each day, we now have 4. And this allows us to create a different type of chart. It gives us a lot more information. One of the main advantages of using a candlestick chart is we have 4 times as much information than we do with a line chart. And this is what makes it so popular and so useful. So for each day, we'll have the day's open, the day's high, the day's low, and the day's closing price. And the candlestick chart is a very, very convenient methodology to represent this visually and graphically. So let's take a look at what this looks like. So how exactly does this work? Now essentially a green bar means that the price rose on that day. A red bar, like here, means that it fell. So I want to look at this green bar here, and let's interpret what it means. So what we have is what looks like almost like a long skinny line with a fat line wrapped around it. Now what the fat line represents, that is the fatter part, represents the open and the close. Now because it's green, it means the price went up on that day. The open will be this low point here where this hand is, and the close will be this higher point here where the hand is. So that's the open and that's the close on that day. Now the high and the low are essentially the bottom and the top of the entire candlestick. So the low will be down here where this small line ends, and the high will be up here where this small line ends. Okay? Now the same thing will apply for a red bar when the price fell that day. So if we look at the next one, again, the high and the low are the same. The high is the top of this small little skinny line up here. The low is the bottom of the skinny line, which is very hard to see because it's very close to the close, but you can just about see the bottom of the skinny line on this one here. That's the low. Now because this was a fall in price, the open will be up here where the fat line starts, and the close will be below where the fat line ends. Right, so the only difference between these two is that in this case, because the price went up that day, it's green, the open is below the close, and in this case when the price went down, the close is below the open. So this is essentially what a candlestick chart is. And as you can see, in each point we have a lot more information than we did before. And this is useful. Now what we can do is also just look at the open, high, low, close, which is what is also known as a bar chart, which we alluded to earlier. And this essentially gives us the same information as before. So again, we can go here, and where these intermediate lines are represent the open and the close, and the top lines represent the high and the low. And actually over here it'll give us the data, what was the open, the high, the low, and the close. So you can use either this chart or the candlestick chart. They give us the same information, they just look a little bit different. But now we know the two different types of charts we can construct. Candlestick and bar charts. Now let's now briefly conclude our discussion on the two types of charts. After this, we're kind of done with chart construction, and we'll go on to indicator construction. Now as we mentioned, the candlestick chart provides much more information than a simple line chart. And what it provides us in addition, is that it tells us how volatile the stock is. So when we know the high and the low of the stock, we can actually get an idea of how much the stock moves around on a day-to-day basis. So with the line chart, all we see is the closing price. So we don't really know how much the stock is moving around during the day. It's going up, it's going down. With the candlestick chart, we can see that much better. We can see how volatile the stock is. And for some technical strategies, using a candlestick chart or a bar chart is preferable. That is, the additional information we gain from these charts will help us, but for certain strategies. And there are some cases where only using closing prices is fine. So in some cases a line chart is fine. In general, the candlestick chart is good if we're interested in intraday movements a lot, for example. So again, which one to use is up to you. It will depend largely on the strategy, but we should be aware that candlestick charts are a lot more informative than line charts.